You heard the chairman of the FT Group, Mr. Jignesh Shah, and is the chairman and group CEO of Financial Technologies, which has a big stake in NSEL. Speaking with our sister channel Awaz. Awaz obviously has a huge commodity audience, and therefore Mr. Shah chose to speak with Awaz and allay fears of commodity investors, but not just commodity investors, stock investors. After all, the client base is the same, and therefore clientele, stock market customers, stocks, equities or commodities are concerned about what is the end game of this issue that has broken up with NSEL defaulting on several of its promises in terms of delivery of money and stocks. Mr. Jignesh Shah is now with us in the CNBC-TV18 studio. Mr. Shah, thank you very much for joining us. Well, first and foremost, a question which Sanjay Pugalia also asked you. Where is the money? I mean, this is a huge amount of money, 5,600 crores. Has someone made off with any part of this money? Are you investigating that as well?
Yes, we are investigating. First, I want to correct you that on the default side, it's those 23 members who are at a default. So that's very important. And we have initiated the default proceeding on the same. The new management which board has put up, they have done everything, whatever is within the framework of rules, regulations and bylaws and the legal framework. All the court cases are filed, police complaint has been done, default proceedings have started, joint recovery process has been initiated, and there are many such things. There are 20 steps has been taken. It took us 1 month to take a grip, and thereafter all the initial, all the very, very strict steps have been taken. So this 20, to recover from these 23 brokers or the buyers, all the efforts are being on. That doesn't mean that we are very sensitive to the pain of investors. Okay, anyone who has benefited will be booked, and I think it will not be fair on my side because there is internal investigation which is going on. There is a police investigation which is on, and we'll see to it that wholehearted and committed to reach a conclusion. But that doesn't stop us from going after recovery.
Yeah, Mr. Shah, it is a little difficult to believe that you, as the group chairman of FT, was not aware of anything that was going on. For one thing, NK Proteins, which is one of the bigger defaulters, 969 crores, and with a net worth of just 108 crores, it is headed by Mr. Nilesh Patel, who is the son-in-law of a person who was the chairman of NSEL. Now, were you not aware of this? This is a serious conflict of interest, and why did you not therefore nip it in the bud?
No, I'll tell you very clearly. If you've seen even the Anjani Sinha's confession or whatever affidavit, it was not known. Now it's very difficult to believe, but it's a reality that the chairman, that Shankar Lal Guru, who is very much you can say pro market development in terms of the APMC automation. He himself has been has given the Guru report to modernize APMC, and the whole process when we associated with him was towards the bringing the transparency in the physical market. Now in I think 12 I think or 11 when NK Protein, the management led by Mr. Sinha, has put up this T+2, T+24 and other things, and when NK took that detail, neither the Guru nor the board was knowing on the things which Sinha himself has admitted.
The chairman did not know that his son-in-law, who was the biggest clientele customer of NSEL, did not have the kind of stocks that he was betting on.
He was not knowing on that this NK lending, and nor the board, and I feel that it will come out. Truth will prevail a day. Okay, there can be cloud, but reality will surface. Okay, reality will surface, and I'm not denying. And as I said, it is a classic case of a management fraud which has happened, and it will come out. But at this moment, our focus and energy is to chase and get it back as much we can, and let all the searches or whatever finally comes out, it will get the truth out of the board, of the Shankar Lal Guru, of everyone. But at this moment, what is the solution and how we can take away pain of the investor is in recovery.
Yes.
And more than 100% focus, okay, should go towards it, and we are really focusing on that, Lata. Yeah. Whether it requires to do dharna against NK industry, or calling for the meeting, reconciliation, court cases, whatever. Okay, it's very, very important, and we really want to do that. and let the investigation reveal. And as I said, because it is investigation internally, externally and judiciary, I would not like to comment, but I can only say this very clearly, that neither the board nor the guru himself was in knowledge of this has happened. And Nilesh Patel, Nimish Patel, whichever is there, we have to work and get this thing out of them.
Mr. Shah, hi, good afternoon. You know, the one query that I have is that how come the settlement guarantee fund fell from 800 crores to 60 crores? And you didn't come to know about it, and we didn't have any kind of similar drop in the obligation.
I think it is again, I before this, the context of the interview when it was got set, I said if micro details are to be asked, there is a Saji Cherian who has taken over as a new MD. Right. The previous MD has answered this. Yeah. I am saying what I wanted to say is as the promoter group is this, that we need to chase this, we need to put the new management, our commitment is complete, recovery is our focus, we want to work with the investor forum, okay, and every detail which is going to unfold it now, because there are parallel investigations which are on, now handling micro issue.
There seems to be no end to the NSEL mess. CNBC-TV18 now learns from sources that the Forward Markets Commission, the FMC, has submitted its initial findings on NSEL to the ED, the Enforcement Directorate. And this particular report highlights instances of money laundering and warehouse fraud in NSEL. Varinder Bansal now joining us with the details. So Varinder, just take us through the key findings of this preliminary report and how incriminating is this?
Well, thank you so much. This is one of the most important reports which has gone to Finance Ministry via ED. Of course, FMC has been working on this report for the last 2 weeks. While most of the content may be known, but this is important information what we are picking up. FMC has submitted the report to ED and they mention clearly that they find money laundering and warehouse fraud in NSEL. They also want Enforcement Directorate to undertake a criminal investigation on NSEL and its Directorate. Remember, DEA will be submitting final report on 16th of September, what we are expecting. So we will be coming to know that what their stance remains after 2 subcommittees which have been appointed by Finance Ministry, has clearly issued to them. Also important is the audit, the forensic report which we were expecting from Grant Thornton. We got the preliminary findings from the report. Interesting is that they clearly state that the borrowers who were involved with the NSEL fiasco, they were defaulting from the last 2 years, and instead of that NSEL was doing business with them from the last 2 years. So this could be quite disturbing as well. And also important is that if all this is proved, or even we got some hint on 16 September, the fit and proper status of the promoters of NSEL could be under risk. So we wait for 16 September to hear if something comes more from DEA. Thank you.
UP sugar mills are in dire straits. The industry claims the cost of production has made business unviable. For the year 2012-13, the UP sugar industry saw losses to the tune of a whopping 3,000 crore rupees, and they say the situation is only going to get worse if the government doesn't intervene immediately. With the cost of production surging, industry wants the government to adopt the Rangarajan Committee's recommendations of revenue sharing, or they fear that business will collapse. To discuss the crisis, joining us in the studio, Kushagra Bajaj of Bajaj Hindustan, Vivek Saraugi of Balrampur Chini, and Abhinash Verma, the DG of ISMA. Gentlemen, appreciate you joining us. Let me start by asking you, how bad are things in UP at this point in time? Have you told the government that if you do not intervene by way of a subsidy or the adoption of the Rangarajan Committee report on revenue sharing, there can be no crushing this season?
Thank you for having us over. See, basically, we've highlighted the point that UP cannot remain producing at a certain cost, which is thrust upon them based on a cane price, which is assumed by the UP government.
Yeah.
So right now, that's 36. Maharashtra, Karnataka produce at 30. So, the ability to now begin crushing is very difficult, not for it's not in our hands. Banks have said we will not renew limits. So where is the money? So until either of the two things which you said is, if they want the farmer to get a price,
which is 280,
if that's 280,
yeah,
and the ability of the mill is to pay 230, 240 depending on Rangarajan, the difference has to be met by someone. And who's that? It's the government, because they're deciding their price.
Informal meeting of key UPA ministers to discuss relief measures for sugar mill ended just a few minutes back, and that too without any decision. Finance Minister P. Chidambaram said the cabinet will be taking a decision next week. However, the Agriculture Minister Shai Pravar said the government is not in the position to give any money as yet, and thus no decision. Before we go any further, hear out Ajit Singh.
हाँ जी सर हाँ लगा दी एक सर क्या डिसाइड हुआ मीटिंग में?
Well, we discussed the various measures and we all recognize the industry is in trouble, and that means a lot of farmers are in trouble. In many areas, the rural economy depends on sugarcane. So first thing is for exports, if duty drawback can be increased from 1.3, the mill owners will apply. There's a committee which determines that, so they'll apply to the committee. The loans against the excise payment, that will be examined. How many years excise duty loan can be paid, and how much interest, government has to bear, or SDF has to bear. On the raw sugar imported, we currently give them, I think, 18 months to export. We'll cut it down to see if we can cut it down to 3. Now, all these issues will come to the cabinet finally. So some measures have been, we have decided, but the cabinet has to consider them. So we hope next week.
On exports are what?
Yeah.
On exports are what?
Duty drawback.
Okay.
Currently it's 1.3.
Okay.
There is a committee under Somit or whatever, which independently decides these things. So the owners will apply to them tomorrow. We have asked them to apply.
From 1.3%.
That will be decided by the committee, but we expect, yes, there will be some raise. Yes.
It will be raised to what level, sir?
That the committee will decide.
Industry loans, sir?
Industry, that's the excise duty. Against excise duty, they will get the loans, and the interest will be paid from SDF.
SDF.
Yeah.
At what percentage interest rate?
We'll see how much money SDF has.
So government will review the SDF interest rate.
No. SDF is a fund created by the sugar industry. So therefore, from that fund, interest will be paid. आइए आप भी बता दीजिए।
नहीं
No, it's not the SDF interest. See, against the excise.
We just discussed the issue. We have done nothing.
So are you going to have to revise the interest rate on SDF loan?
No, we have not discussed that. We have to study what will be the impact, what will be the burden, from where to bring money. Government is not in position to provide any money, so we have to see that.
Center will not provide any money.
At least as on today, we have not reached to any final decision.
So will you speak to the UP government on sugarcane price, sir?
No.
So will you give any interest subvention?
The mills have said they will not start crushing unless UP government decides. So do you think that production will fall because of this logjam between mills
and also farmers
government?
Have arrears from the mills.
Basically, we are not. It's not question of Maharashtra, Karnataka, or Tamil Nadu. We discuss general situation. It is true that the prices has been dropped, and that's why industry is facing serious problem. We want that crushing should start, and that's why we are just discussing. And we are trying to, there are 3, 4, 5 alternatives which were brought to our notice. We have to study what will the impact of these alternatives. That information we'll get in 8-10 days, and then again we'll sit.
Sir, Maharashtra निर्णय sir, Maharashtra और
कुछ नहीं।
So that's Ajit Singh and Sharad Pawar both saying a decision should be taken over the next 8 to 10 days. There are various proposals before the government. Let's go across to Shireen Bhan for more perspective. Shireen, 50 lakh farmers are, stranded at the moment. The government was expected to take some decision. Maybe next week the cabinet will be taking up the issue.
Well, as we've been pointing out, there was no expectation of a decision being taken by this meeting that was called by the Finance Minister, the Agriculture Minister, and people like Ajit Singh. What we have been maintaining is that a decision, if any at all, will be taken at the level of the Cabinet, which is exactly what the Finance Minister has said. Now, let me just take you through what the options in front of the government are, because the options are really limited. Remember, if we go back to 2006-2007, when a similar crisis had engulfed the state of Uttar Pradesh and the sugar mill business, what what the centre had then done was to intervene by way of incentivizing exports. My sources tell me that that is unlikely to be a route that the government will follow, and that is because that export incentive scheme is not WTO compliant. The other measure that had been taken was that the buffer stock, the centre had borne the carriage fee, etc., as far as the buffer stock was concerned. And the third option, which was really by way of an interest-free loan for 4 years, where the centre bore the interest of 12% for a period of 4 years. The amount worked out to about 3,500 crore rupees. My sources tell me that this perhaps is the most likely option that the centre may in fact consider. But as you just heard the Agriculture Minister Sharad Pawar over there saying very categorically that we don't really have the money, so we're going to have to take a call on what it is that we can do to intervene. That's as far as the centre is concerned, where the options really are limited. Now let's come down to what the state government can do. At the heart of the matter is a difference of 55 rupees. 225 is what the mill owners say that they are willing to pay for a quintal of sugar. 280 is the state advised price. The difference of 55 rupees the sugar business feels can be met either by way of a direct subsidy by the UP government or through several options. Let's just take you through some of those options. Allow the sugar mills to actually sell molasses to the liquor industry at market prices. Allow cogeneration prices of the sugar industry to be hiked. But these are all things that the UP government is going to have to mull very carefully. There's also talk about that capital intensive scheme or capital subsidy scheme of 2004 being revived, but that would mean a cost of about 4,000 to 5,000 crore rupees as far as the UP exchequer is concerned. So my sources tell me it's unlikely that the government will go down that route. So at this point in time, there's been no decision that's been taken at the meeting today. There has been no response from the UP government. In fact, the UP government now suo motu taking action, coercing sugar mills to actually pick up sugarcane from farmers, also telling them and giving them commencement operation dates. So that is where things currently stand. Perhaps next week we will see some decision being taken by the centre, and as the crushing season proceeds with the political situation building up, given the fact that we have about 35 lakh farmers and their future at stake, perhaps we will see the UP government blink as well.
Do you finally think that FDI will come in a year and a half after you originally had started this move in November 2011?
We are seeking to open and attract investment at a time when the flow of capital globally is very weak, and we are conscious of that.
Now it'll be a few more months before you hear more from Trent and from Tesco, but we're very pleased with the meeting. We came here for some clarifications on the policy, and the Minister is going to consider some of the concerns that we have raised.
I'm sure that there are no issues which will come in the way for them to make a positive decision on investing in India.
The world's third largest retailer, Tesco, is likely to be the first player to enter the sector. Ritu, are you sure about this? Because we've heard of this many times before.
Two government sources have told me that it is Tesco which is in the final phases of applying to the FIPB.
Hopefully before the end of this year, you will see the first big move on multi-brand rolls.
We had told you first this morning, and it has happened. Tesco has applied to the FIPB to invest $110 million in India.
Do you finally think that FDI will come in a year and a half after you originally had started this move in November 2011?
Well, first of all, for 10 months we were totally stalled, thanks to the partisan agenda of our opponents, primarily the Bharatiya Janata Party. So we had to put the decision on hold, that's in suspended animation, until we went through another round, and then on 14th of September took the decision. This is the first time India is opening up multi-brand retail. We have looked at the models of other countries. We have also looked very carefully at our own socio-economic realities. Mind you, we are seeking to open and attract investment at a time when the flow of capital globally is very weak, and we are conscious of that. Therefore, to create an ecosystem which is encouraging, supporting and welcoming of foreign direct investments. So we have done that.
With this policy change, can you put out an assurance to the likes of Walmart or Tesco or anybody else who is looking at India that they won't get hassled in India, that the door and the welcome will actually be red carpet treatment? On what basis do you say that, sir? Because many of the regulatory agencies and issues...
Which ones?
For instance, the non-transparent equity structures which are being...
That won't happen because we have brought greater degree of clarity when it comes to the equity structures. The definition is clear. People have been either confused or not clear about it in the past. See, we have to be very clear. One is ownership and control in the domestic context. That is the SEBI-SAT or the Companies Bill 2012, which is before the Parliament. The second is the FDI definition. That is about the foreign equity and the Indian equity and ownership and control definition. So what we have sought to do now, yesterday,
is to align them.
Align them to the maximum possible.